Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. Okay, so before we go ahead with the market recap, I do want to make something very clear in case you're not in the Discord or you missed the announcement. The general recaps, mainly the crypto recaps, will no longer be available to the free members. Okay, so you're going to get a recap video like this nearly every day, which is going to go over the general markets. And what that means is I'll be looking at the dollar, I'll be looking at the US stock market. I will also be looking at Bitcoin because I will use Bitcoin as the pretty much the view into all of crypto. And then, we may look at gold, silver, oil, treasuries, things like that. And then also I will, touch on market related news that'll come out, financial juice, and just give you my general thoughts and what I expect, macro, micro, that sort of thing. But when it comes to specific looks into assets, like specifically looking at, Ethereum or Solana or XRP or whatever, that is no longer going to be for free members. That's just going to be for the Patreon members who are part of the services, whether that's the copy trade service, the swing trade service, or the tutoring service. They are the ones who will have the recap videos available to them. I also will be doing now exclusively stock market recaps, so pretty much our stock positions. So if you're not a member, you probably have seen me do updates on stock positions, via me closing them. I'm in a lot of stock positions. That's actually predominantly what I'm trading. So if you are interested in that, make sure to check out the Patreon. It's $15 a month for the swing trade service, and that gives you both crypto and stock market exposure. Okay? All right, so let's get into it. So firstly, we're going to look at the dollar. As you can see, we are getting a very nice pullback, very nice consolidation after this nice rise to 114.88. Just missed it, came down, had a nice retracement down, hit the support zone, and now is starting to kind of trade sideways. And it's pretty much doing exactly what I thought it would do. I do think we're going to get another drop into the dollar to at least test this rising trend line and potentially break through going down towards this blue zone here. Okay, so the uptrend is still intact, very, very strong. Nothing's really changed in that regards, but the short-term rise has lost a lot of its, its fuel. So I do think it's going to probably come back down and maybe even grab some of the liquidity that's probably pulling under this pivot level here. Okay, so you're probably going to see the dollar trade sideways continuously, eventually break through this level, and then break down to eat up any liquidity that's down under this this pivot or swing low, and tap this level here before potentially rising again to come back towards 111. So I am seeing a 108, at best 108 to maybe 110 if we're going to have a very lackluster drop in the dollar. All right, and that's good. That's good if you want to see short-term rises in both equities and cryptos, and that's my idea of what's going on. It's one of the reasons why I've been positioning to be long in a lot of things, but I'm also slowly transitioning short, especially in crypto. If you've been paying attention, if you remember, I've been slightly, picking at certain things that have kind of been a little bit overextended and going short on those. All right, but look for the dollar to continue its drop to at least get under this swing low, this pivot level at about 110.1, 110.05. All right, let's take a look at the Dow next. So the Dow, again, looking beautiful. So grab the liquidity under this level here. So any liquidity that was under the previous 2022 lows has been grabbed, in my opinion. We had a nice drop, piercing this, making new yearly lows, and now made it back above the general support zone and are making our way towards this descending trend line. And I see us getting probably all the way up to this trend line, and then we'll find some resistance there. And I will also, as we're rising, if you're part of the swing trade service, you'll start seeing me start transitioning slowly into short positions. Okay, it's very important that we, as retail is chasing the longs, chasing the buys, that we're selling to them, and at the same time slowly transitioning into shorts. Because all throughout this drop, what have we been doing? We've been going long, we've been buying, we've been adding on, and now our positions are starting to go into the green, starting to show a lot of good profit, and it's time to start taking that money, paying ourselves, and then at the same time switching short. Okay, It's got to be a nice slow flow. Things will extend out, but I am seeing the Dow getting to at least this descending trend line. It can go higher. I do see it possibly breaking past this level and attacking the liquidity levels above this pivot here, because it may not have enough fuel above this level here to start pushing down again. It may want more. It could potentially even break all the way back up to 34,000, 34,300. But in my opinion, it's more likely, the probabilities are more on the side, that once we start tapping these liquidity levels here and here, it'll start slowing down and we'll continue the path to the downside. Okay, we'll see if we make a higher low once we start breaking down. That will give us potential sign of a bottoming for the year. Okay, like this may be the bottom for the year, but that's not, that's what may be. That's not what's happening right now. But we'll be on the lookout for something like that. Next is the S&P. So let's go to that. I'll try and shoot through these as fast as I can. So S&P, again, been holding this pivot level here at 35.88, for quite some time. Nearly tapped its COVID pivot high prior to the lockdown drop, but just missed it, but got very close with this wick here, and now is making its way up, and I see it getting to at least 39.64, but it's probably going to break up higher and at least get towards this level here at 4060. We'll say 4060, because what I'm seeing here is a lot of imbalance that's starting to get eaten away. So this drop here, there's a lot of imbalance here, and a big imbalance, a big fair value gap is sitting right here, and I see this eventually being eaten away. So the high side at about 4,061.5, and if we do start eating this up and we have the fuel, we're going to tap this liquidity at least in a wick, if not an actual candle closure, above this level here, which would be about 4,200, and that really kind of coincides with this major level here, 42.45. If price were to come into this fair value gap, start trading it, filling it, and then breaking past this level, eating away at the liquidity that might be sitting up there, and then tapping this level, I think that would be sufficient enough to grab any stops that are sitting there, any buy stops, any sell stops, and then just start turning over again. So we're in a good position for a prolonged rally. And if you look at seasonality, we're approaching usually what is considered bullish times in the market, which is, end of October, and then November and December tend to be bullish months for the stock market. So we're having some really nice signs that we're going to see some upside, and there's also some geopolitical signs that support that, and I'll go over that after I look at the NASDAQ here. So next is the NASDAQ. So NASDAQ, again, holding that median channel line. So we have that descending median channel, and NASDAQ currently is holding the zone, popping up from it, and lacklusterly, it could hit the top line of this descending channel and find weakness and start selling off. I don't see that happening. I see it looking to pretty much do exactly what the S&P is going to do, and try and fill out this liquidity, this imbalance here, and then try and attack the liquidity above this pivot level here, which again coincides with the green zone that we've had this zone up since the beginning of the year. Right, this green zone has been here since I want to say I drew this in February and March. I pretty much drew this whole chart in February and March, and it's been pretty much holding steady the whole time. I don't know why my hammers got messed up. They were actually pointing down. It looked good. There we go. That's how they were looking. But essentially, the NASDAQ chart has been pretty accurate, I would say. S&P chart as well since the beginning of the year. And I do see us coming back to the green zone. I don't see us holding the descending channel top line. Kind of like what we saw here, I do see us peeking through, trying to grab as much of this liquidity as possible, and then finding weakness enough to potentially break back into the channel, or we're going to have a bullish break of the channel finally. Not like this. This was what we would consider a false break. A bullish break, failure here, and then a return back to the top line channel and holding it. That would be a bullish break, and then we would look for follow through to then continue higher. That again potentially may be happening. We may see this as being the yearly low. Again, not the low, but the yearly low. I personally am in the camp that the drops are not done for both crypto and stocks, but we are, in my opinion, near a point where we will have a resting period after such a dramatic fall over months, that we will see a significant bear market rally. Okay, and Nasdaq didn't get to the COVID pivot high. It got decently close, but not close, not nowhere near as close as the S&P, and the Dow actually pierced under it. So the Nasdaq has plenty of room to potentially come lower. Tech is so overvalued; it would not be surprising if we see more downside for the Nasdaq. Even if the Dow and S&P do show some relative strength, the Nasdaq has a lot of glut in it. But I do like what I'm seeing overall in the short term. And as the Nasdaq starts approaching the the high side of this descending channel, and then as it starts approaching the green zone, I'm going to be looking for those shorts, for those short ETF positions, for those shorts on overextended stocks. So make sure, if you are in the swing trade service and you want to follow me, make sure you have those alerts on. Okay, and let's now take a quick look at oil. So oil is super interesting. There's so much politics going on with oil, but oil's been actually following the chart that I've drawn for quite a while. Let's go on the higher time frame. So this is the daily. Let's actually go on the weekly so you can get a cleaner look. Yeah. So actually, you know what? Let's go on the monthly, because I want to start off where I first drew a lot of this stuff. Okay. So the first time I shared this chart in the Discord was many months ago. I have it pinned on, I think, the open channel, the open air channel. So open floor, I should say. So if you want to see when I originally posted, you just check that out. It was months and months ago. Pretty much, I had warned back then that a breakage of this line here, this thick descending trend line here, is super bullish. That oil, like the dollar, is going to be in a very bullish decade. All right. So that doesn't mean, though, that we're not going to see downside in the decade. I think we are. We currently are seeing that downside. So we may have months and maybe even a year or two of downside in both the dollar and oil. But if you look at the macro charts, like this chart in the monthly, the downside is just coming back to bullish buy zones, and then potentially going to continue higher for years on end. And oil, to me, is clearly showing that bullish break. We had a what I would consider a bear market in oil pretty much since the early 2000s. Once we got up to 2008, the 2008 crash, that was it. It was in a bear market since then. Broke the uptrend structure and then continued lower and lower, made a new all-time low, and all-time low in the modern day, I should say. And then boom, since then, broke through that down macro structure. Held this parabolic channel until this parabolic ascending trend line until now. But even though it broke it, because it broke this descending structure, it's still super bullish. And now it's coming to what I would say are pretty big accumulation levels. So we're looking at 84 to 75. Got very close to 75 here. And then the ultimate level is going to be $60. I actually see it still coming all the way down, potentially $60. But hitting any one of these three levels, as it already has, in my opinion, means it can now blast up, and the structure will look fine. Okay, the structure will look natural and healthy. So even though I do think personally it will come at least to 75, it got very close. It got as low as 76.28. I do think it actually will come to 75, but I am leaning towards a visit of $60. Even though this didn't fully get hit, got mostly hit, and this level got hit, if it were for the next, now let's say 6 to 7 months, were to go up higher, it would look absolutely natural. It's not out of the question. It's fallen enough from this rise to where if the trend is super powerful, it would make sense for it to rise. And you can actually use Fibonacci if you want to do it that way to give you an idea, right? So if we're going into a massive uptrend, here's the retracement. Where did oil retrace to? So the 38.2. All right, so oil's retraced to the 38.2. If it bounces from here and continues a higher trend up, that's totally healthy. Okay, that's super healthy. That's a decent retracement. That's enough of a retracement for a very powerful uptrend, and that's what I'm seeing. So be very careful if oil starts showing major signs of ending this small retracement, because this is what it is. It's a retracement, a resting period from this dramatic rise. We are going to be looking at, again, $100+ oil per barrel barrel, and then we're going to be looking at even higher than 120, 130. We're going to be going into the 140s and potentially even the 150s. We do not want to underestimate what we're seeing here. Okay, and now let's go down to the weekly real quick. So weekly, as you can see, this ascending trend line here, I drew. I just wanted to show an example of, trend lines are pretty incredible. Once you start connecting pivots, this high pivot to this high pivot, and pulling it out into the future, you'll see it play a role that you never would have expected. And look, price comes right up to it, fails off of it, sells off of it, and now sitting on top of this high pivot level here. It's pretty incredible once you start messing with the trend lines and start seeing like, oh wow, this stuff actually works. The challenge is understanding how to siphon through what lines mean what and what structure, and that comes with experience. And if you want to learn that stuff, again, I do run a tutoring service. Just check out the Patreon for more details on that, or DM me on the Discord. Okay, it's not as hard as it may seem. But it does take some time to kind of get used to. And I will say, I promise, it is very, very useful to know. It's definitely not something that you could do without. Once you know it, it makes things a lot more clear and a lot easier. But as you can see, we are likely going to start trading sideways here and maybe start piercing down towards 75, grabbing whatever liquidity is down there. Once we hit 75, be on the lookout for big moves to the upside potentially. Okay, I do think we do break the 60, but this is a zone where it can happen in a day where we break up hard. All right, and then as we're going into the holidays, what do they normally do? At least in the States, they jack up the prices of gas. Okay, they jack it up because they know people are going to be traveling. It's prime for a rise in oil. So be careful out there, guys. We could be seeing much stronger oil prices coming. All right, and let's take a quick look at gold and silver, and then I'll call it a video. So golds, let's go on the daily. Gold's been pretty interesting this year. I actually thought this year it would perform a little bit better than it has. Percentage wise, it's done okay. In the face of the selling, it has sold off, but percentage wise, it has sold off less, but it has sold off. I do like gold in the long term. I think gold's also in a pretty bullish structure. Okay, so what we're seeing in gold, so looking on the monthly chart, we're actually seeing gold potentially going to show signs of a long-term uptrend. Okay, so it's been in a pretty long-term uptrend, but we are potentially going to be seeing gold staying up for a long period of time. If we're looking into this decade. In the short term, though, we are breaking the uptrend, so we're breaking the structure. So we just broke these lows on the monthly. What we're likely going to see now after taking the liquidity down here is a rise. And it's this simple, guys. Once you start seeing consecutive candles in a direction, especially on these higher time frames, you want to look for resting periods. So once you start breaking, the structures, these down pivots right here where liquidity is resting, now you're going to probably break through up and start looking for imbalances, start looking for fair value gaps, start looking for anything that will likely have more liquidity to the upside, and then break down from there. Oh, wrong tool. Let me get rid of that. Okay, so where I'm looking now for gold to get to, once I start seeing an actual rest, an actual period of stopping, which it can be here, it may break lower. We have to see how the month closes out. If this month closes out in a doji, so let's say it gets bought back up and gets bought back up towards the 1,660 zone, potentially look over the next couple months of gold getting all the way back towards 1830 and then potentially all the way up towards 1900. Once we get to 1900, be on the lookout for a failure back down to go even lower and eventually test out this level right here. And once we hit this level right here, watch for a pretty long-term consolidation going sideways. So this zone here at about 1300 to 1350 is going to be a lot of buying activity. It's going to be a lot of fair value activity. It's going to be very even there, in my opinion. I don't see us just breaking down immediately. We're probably going to trade sideways, start piercing down, attacking this long-term ascending trend line, and then eventually I do think gold will be bullish. It will start breaking back up. Okay, this structure is still bullish, but we are going into a prolonged sell-off. Once we have this rise that's coming to test out this, to eat away at as much of this imbalance as possible. Okay. All right, now let's take a quick look at silver. And silver, talk about an underperformer. Silver has been a massive underperformer this year. If you're a metals trader, you're probably very frustrated with silver because, gold had a really nice move earlier this year. Silver didn't really follow that well. Had a nice boom up, but just had no follow through from there. Started to look like a bullish consolidation and then broke under this level here, so lost this zone, and now it's likely going to come back up. It's likely going to come back up, fill out this small fair value gap right here, and then fail off of it right here. It's very, very small. So this fair value gap right here, if it actually gets a prolonged move, it'll go towards this bigger fair value gap right here, and then fail off of this. It's very unlikely from what I'm seeing that it actually finds the strength to get above this level. All right, so we're likely going to see silver trade up into the month, into this level here, and then into potentially the $24 level here, and then fail under. Okay, and go lower. It's probably going to go lower. It's probably going to get all the way back down to $14, $15. And there's gonna be a lot of frustrated silver traders, but be on the lookout if that's what if you're trading silver, you may have a potential long opportunity here to long to these levels, and then you'll have a really nice short opportunity to have a nice long-term short. Looking on the daily, what we're seeing now is kind of like a broadening structure here. So take a look at this on the daily. Let me get rid of these drawings, make it a little bit easier for me. If I can, oh, here it is. All right. Okay, get rid of that. So take a look at this structure. We have a broadening structure on silver. And again, not what you really would like to see. Okay, so it's a microphone structure. So we're likely going to see another, in my opinion, we're likely going to see a rise up towards at least this level here at $20, $140, $20, $130. And then potentially break lower. But keep in mind the monthly chart is primed to go higher. Okay, it's primed to go higher in the short term. So over the next, I would say, 2 to 4 months, so going into next year, early next year, we may see a move to come back and start eating at this imbalance here. Because remember, on the monthly chart, this is where I think we're going to start topping out, is $24 right over here. And you actually have another fair value gap here on the daily that coincides with that, right? So right here, small again, right there. Okay, so this is where I do see us topping out, and that would mean that we got rid of the liquidity that's above this level here, above these levels here, and we tapped into enough of this imbalance to potentially give us the fuel to break down again. All right. Okay, so I think that's all I'm going to go over for now. Just remember, this is how the recaps are going to be for the free members going forward. And actually, before I end it, I'm sorry, we'll look at Bitcoin, okay? That way I can give you my general thoughts on crypto, but that'll be it after that, yeah. So, Bitcoin, okay. So, Bitcoin, again, not much has changed with crypto. So, my last recaps that you may have been listening to, again, potentially showing a bottoming structure here, have this low that hasn't been breached off of Bitcoin just yet. We are into a tight squeeze with Bitcoin, so a lot of indecisiveness. I think you should have a slight bullish bias just based off of how much it's dropped and how well it's done to hold 19,000, 18,000. Okay, there has to be a bullish bias just from that. But we do want to respect the macro down structure is very clear. Okay, the macro is still trending down. So if we do break down, it's that's part of, we're in the trend. Okay, but we have a lot of imbalance. We have a lot of imbalance that we haven't tapped into yet. Okay, there's a lot of liquidity that we haven't tapped into yet. In the short term, we have liquidity, a fair value gap just right here. So we could have Bitcoin come right up to there. We have some really small ones right here I don't want to really put that on the chart. I don't want to put too many of them on the chart because it gets a little boggled. But right there, we're actually battling it for quite a while. You can actually argue it's been filled by this wick. Then we have some more as we go higher up. So right here, one right there. We have plenty. We have so many on Bitcoin. We have some right here, and then we have the big ones all throughout here. I mean, we have so much liquidity that's sitting up here that in my experience, I would be very surprised if we don't at least pierce, some of these up here. Okay, so I'm looking for at the very, very least, Bitcoin finding a pop up to attack this high pivot and grab the liquidity that's residing here. If it does fail off of that, it's not out of this world. It's actually unlikely because if you look at the structure, so go back in other charts and take a look at charts that have dropped dramatically, have what looks like a double bottom structure. This is an Adam and Eve double bottom. Once you take the first high pivot, what tends to happen is you have a change of character. Okay, you find either a consolidation or a retracement, and then in that retracement you hold certain levels. You'll hold this level here, you'll hold this level here, or you'll hold the actual low here, and then you break down, break up, and you go higher. Okay, it's just a change of character. And then you just start doing what? You start just making higher highs, higher lows, higher highs. It's really that simple. We'll see if we're at that point where Bitcoin is finally going to start eating away at the high imbalances over here, and you're just doing a slight change of character. In the long term, we're still in a macro downtrend, and we have to respect that. Okay. All right, everyone. That's it for this market recap. I hope everyone's been having a great day. If you have any questions about how things have changed up, don't hesitate to ask me on the Discord. If you're interested in becoming a member of any of the services, make sure to check out the Patreon link in the Discord, or in the video description. You can see what each tier will give you. All right, everyone. Take care. Make sure to always be patient, be vigilant, and be nimble. Love you guys. Take care.